Here we're starting from scratch as an investor in today's wild stock market, and I only had the option of investing in just one thing. This is the fund that I put my money into. In today's video, I'm going to show you exactly what it is. No, I wouldn't be chasing the next Nvidia. I wouldn't touch the latest AI hype stock. I wouldn't be trading individual stocks, doing options, or messing around with Forex. I wouldn't even buy Apple, Tesla, or Nvidia. I'd keep it simple and focus on just one ETF that gives me everything I need. What if I told you that one simple fund could build your wealth, outperform most investors, and give you a peaceful night's sleep, all without lifting a finger? It exists, yes it does. It's called the Total U.S Stock Market Fund. And today I'm going to show you how this one fund portfolio works, why it's backed by decades and decades of data, and why, ironically, almost no one has the discipline to stick with it. We're constantly bombarded with hot stock tips, sector rotations, crypto, real estate syndicates, and some guy named Dan on Twitter trying to sell you a course. But here's the secret: simplicity often wins. The Total U.S Stock Market Fund gives you exposure to thousands of companies, from Apple and Amazon to the coffee shop chain you've never heard of. It's instant diversification, ultra low cost, and proven over time. But before I get into the nitty-gritty of this fund and why it could be a game changer for you, let's take a step back to fully grasp the importance of simplicity as it relates to investing. Simplicity outperforms complexity. A popular quote by Warren Buffett says, "There seems to be some perverse human characteristic that likes to make easy things difficult." In investing, complexity kind of feels smarter, but it rarely performs better. Study after study shows that most active investors underperform the market, despite all their strategies, the screens, and trading models. Meanwhile, simple approaches like investing in a low-cost index fund quietly beats most hedge funds over the long term. Why, you may ask? Because the more complex your strategy, the more points of failure you introduce, more decisions, you have more emotions, more mistakes. Next is that simplicity protects you from yourself. A simple portfolio helps you win by avoiding emotional mistakes. When the market drops, like we saw during the 2008 financial crisis, complicated strategies, they actually fall apart because people panic. They sell low and try to time the rebound. But if you have a simple portfolio like a one fund total market strategy, you just stay the course. There is no tinkering, there is no fear. That's when real wealth is actually built, by doing less, not necessarily more. Simple doesn't mean shallow. I think I need to clarify that. People assume that simplicity is equal to lack of sophistication, but that is not true. A total market fund includes thousands of companies, like I said earlier. You're getting exposure to all sectors, all caps, be it large, small, mid, and all the major trends that's out there. It has an inbuilt rebalancing mechanism and sort of self-corrects. So when one company isn't doing well, you have less of that company in your portfolio, and the other company is doing great, automatically takes up more space. Most importantly, simple portfolios are easier to maintain and scale. I can tell you that for free. Let's say you start with $500 a month auto-invested into a total market ETF. You don't need to do anything. You don't need to rebalance. You don't need to monitor earnings call or follow the Fed meetings. As your income grows, you just increase your contribution. That's how it works. There is no extra complexity added. And for busy professionals or anyone at that who wants to build wealth without a second job, simplicity makes investing scalable and sustainable. So let's define what a total US stock market fund is. Imagine you want to invest in the US stock market, but you don't want to guess which companies will win or lose. Instead of picking individual stocks like Apple or Tesla, a total US stock market fund lets you invest in the entire market at once. So what does that mean? It means when you buy a share of a total US stock market fund, you're buying tiny pieces of thousands of US companies all at once. So the big companies, the medium-sized companies, the small companies, from tech giants to smaller companies that you've even never heard of. Think of it like this: owning a total market fund is like owning a piece of every store in a giant mall. If one store goes out of business, it barely affects you because the other 3,499 companies are still running. You don't have to bet on which store will succeed. You own the entire mall, or you own the whole mall. And the goal here is simple: to give you broad exposure to the entire US economy without trying to predict which individual stocks will perform best. So if the US economy grows, which it will, your investment grows as well. So you might just be wondering, why should you even bet on the US economy? After all, the US isn't the world technically. And with this strategy, it appears you have no international exposure. While I am not against incorporating some form of international exposure in your portfolio, I believe the US should form the core part, or the basis, if you get what I mean, of your portfolio for the following reasons. First is that the US has led the global market for decades. Over the last 30 plus years, the US market has consistently outperformed most international markets. Where the US S&P 500 specifically has returned average of 10% annually, international developed markets like Europe and Japan returned around average 4 to 6% over the same time period. Emerging markets like China and Brazil were even more volatile and sort of inconsistent. Bottom line is this: if you had simply invested in the US, you'd likely have more money today than if you diversified internationally. The second reason that I would like to mention is that US companies are global powerhouses. Even if you only invest in the US market, you're still getting some sort of global exposure. Companies like Apple, Google, Coca-Cola, Nike earn 40 to 60% of their revenue from outside the US. So you're not just betting on the US consumer as it may, you're investing in American companies that dominate worldwide. International markets come with more risk and less reward. Many international economies actually have slower growth. They are most times politically unstable. Some even have weaker regulation and a lot of currency risk. The US has proven to be more stable, more innovating, and more rewarding over the long term. So if you decide to go all in with this one fund, you're diversified across 3,000 plus companies, exposure to all industries, name it: tech, healthcare, energy, finance, and more, and you own a piece of the most innovative economy on earth. With that said, how do you actually invest in a US total stock market fund? There are a ton of funds out there, and these funds are largely similar across different brokerage firms. I personally prefer exchange traded funds, ETFs, over index funds. So the three examples I will share today are all ETFs. Number one is the popular Vanguard Total Stock Market ETF, VTI. VTI tracks the performance of US Total Stock Market Index with an expense ratio of 0.03%, which means that you only pay $3 annually for every $10,000 invested. Number two ETF is Schwab US Broad Market ETF, SCHB. This ETF tracks the total return of the Dow Jones US Broad Stock Market Index. It also has an expense ratio of 0.03%. And then the third option that I have is iShares Core S&P Total US Stock Market ETF with ticker symbol ITOT. It tracks the performance of the S&P Total Market Index. Similar to the previous two options that I mentioned, this also has an expense ratio of 0.03%. It's super simple to invest in these funds. All you have to do is open a brokerage account like Fidelity, Vanguard, Schwab, or even Robinhood. If you don't have a brokerage account already, search for any of the three examples that I shared in this video. My personal favorite is VTI, like I said, and you buy shares regularly, be it monthly, bi-weekly, whatever works for your budgets. Easy peasy. I shared another simple investment strategy in this video right here, so make sure you check it out if you would like to learn about other successful investment strategies. If you got value from this, hit the like button, it really helps, and subscribe for more no hype investing strategies that actually work. Drop a comment below. Do you own a one fund portfolio, or are you thinking about it? Let's chat in the comment section below. My name is Ayolu and I love yapping about money on this channel. Thank you for watching and I will see you in the next one. Bye.